Are you ready to make a smart and lucrative financial bet in 2024? Here, we'll reveal 4 top stocks that have proven to be resilient, profitable, and full of growth potential. Whether you're a seasoned investor or just starting, stay tuned to discover which stocks you should be investing in for a prosperous future. Stock 4. Alphabet Incorporated is the parent company of Google, the world's leading search engine and online advertising platform. Google also owns and operates many other popular and innovative products and services, including YouTube, Gmail, Google Maps, Google Cloud, Google Play, Chrome, Android, and more. Alphabet is also involved in cutting-edge research and development projects such as artificial intelligence, self-driving cars, biotechnology, and quantum computing. Alphabet is one of the most dominant and profitable companies globally, with a market capitalization of over $2.5 trillion as of January, insert year. It has consistently delivered impressive revenue and earnings growth driven by its core online advertising business, as well as its diversification into other segments such as cloud computing, hardware, and YouTube. In 2023, Alphabet reported a revenue of $280 billion, up 23% year-over-year, and a net income of $80 billion, up 28% year-over-year. Alphabet is expected to continue its strong performance in 2024 and beyond, benefiting from the increasing demand for online services, especially in the post-pandemic era. The company has a loyal and growing user base, a diversified and innovative product portfolio, a robust and scalable infrastructure, and a visionary and talented leadership team. Alphabet also has a huge cash reserve of $160 billion, which gives it the flexibility to invest in new opportunities, acquire strategic assets, and return value to shareholders. Alphabet is a stock that you can buy and hold for the long term, as it has the potential to generate consistent and superior returns. The stock is currently trading at around $3,500 per share, with a price-to-earnings ratio of 31, which is reasonable for a company of its caliber and growth prospects. Analysts have a consensus buy rating on the stock, with an average target price of $4,200, implying a 20% upside potential from the current level. Stock 3. Discover Financial Services is a leading provider of credit cards, personal loans, student loans, and online banking services in the United States. The company operates through 2 segments: direct banking and payment services. The direct banking segment offers various consumer lending products such as credit cards, personal loans, student loans, home equity loans, and checking and savings accounts. The payment services segment operates the Discover Network, which processes transactions for Discover branded credit and debit cards, as well as third-party cards such as Diners Club and Pulse. Discover Financial Services is a well-established and profitable company with a market capitalization of over $50 billion as of January, insert year. It has consistently delivered solid revenue and earnings growth, driven by its strong customer loyalty, diversified product mix, efficient cost structure, and prudent risk management. In 2023, Discover Financial Services reported a revenue of $13 billion, up 15% year-over-year, and a net income of $4.5 billion, up 25% year-over-year. Discover Financial Services is expected to maintain its momentum in 2024 and beyond, benefiting from the recovery of consumer spending, especially in the travel and entertainment sectors, which were severely impacted by the pandemic. The company has a loyal and growing customer base with over 70 million cardholders and a high retention rate of 94%. It also has a competitive advantage in the payment services segment as it owns and operates its network, giving it more control and flexibility over its pricing and services. The company also has a strong balance sheet with a low debt-to-equity ratio of 0.3 and a high return on equity of 27%. Discover Financial Services is a stock that you can buy and hold for the long term, as it has the potential to generate steady and attractive returns. The stock is currently trading at around $200 per share with a price-to-earnings ratio of 11, which is cheap for a company of its quality and growth prospects. Analysts have a consensus buy rating on the stock, with an average target price of $250, implying a 25% upside potential from the current level. Stock 2. Walt Disney Company is a well-known entertainment company that owns and operates beloved brands like Disney, Pixar, Marvel, Star Wars, ESPN, ABC, and more. The company has 4 segments: media and entertainment distribution, parks, experiences and products, direct-to-consumer and content sales, and licensing. The media and entertainment distribution segment produces and distributes content for various platforms such as theatrical, home entertainment, streaming, and linear TV. Walt Disney Company is one of the most valuable and influential companies in the world, with a market capitalization of over $400 billion as of January 2024. It has consistently delivered impressive revenue and earnings growth driven by its unparalleled content creation and distribution capabilities, its loyal and passionate fan base, and its strategic expansion into new markets and segments such as streaming and e-commerce. In 2023, Walt Disney Company reported a revenue of $90 billion, up 20% year-over-year, and a net income of $15 billion, up 30% year-over-year. Walt Disney Company is expected to continue its strong performance in 2024 and beyond, with the reopening of its parks and resorts, which were severely affected by the pandemic, and the sustained growth of its streaming services, which have surpassed 200 million subscribers worldwide. The company has a dominant and diversified position in the entertainment industry, with a diverse portfolio of intellectual property, a global and multi-generational appeal, and an innovative leadership team. The company also has a healthy balance sheet with a moderate debt-to-equity ratio of 0.6 and a decent return on equity of 12%. Walt Disney Company is a solid long-term investment with the potential to generate consistent returns. The stock is currently trading at around $200 per share, with a price-to-earnings ratio of 27, which is fair for a company of its caliber and growth prospects. Analysts have a consensus buy rating on the stock, with an average target price of $250, implying a 25% upside potential from the current level. Stock 1, PDD Holdings Incorporated, is a leading e-commerce platform in China that offers a wide range of products and services such as apparel, electronics, groceries, health and beauty, home and garden, travel, and more. The company operates through a unique and innovative business model that combines social networking, group buying, and gamification features to create a fun and engaging shopping experience for its users. The company also leverages artificial intelligence, big data, and cloud computing to optimize its operations, marketing, and customer service. PDD Holdings Incorporated is one of the fastest-growing and most disruptive companies in the world, with a market capitalization of over $300 billion as of January 2024. It has consistently delivered phenomenal revenue and earnings growth, driven by its rapid user acquisition, high user retention, strong network effects, and low customer acquisition costs. In 2023, PDD Holdings Incorporated reported a revenue of $60 billion, up 50% year-over-year, and a net income of $10 billion, up 100% year-over-year. PDD Holdings Incorporated is expected to maintain its explosive growth in 2024 and beyond as it benefits from the increasing demand for online shopping, especially in the lower-tier cities and rural areas of China, where it has a competitive edge over its rivals such as Alibaba and JD.com. The company has a massive and loyal user base with over 1 billion active buyers and a high annual spending per user of $600. The company also has a competitive advantage in the e-commerce industry, as it offers a differentiated and personalized shopping experience that caters to the preferences and needs of its users. The company also has a strong balance sheet with a low debt-to-equity ratio of 0.2 and a high return on equity of 20%. PDD Holdings Incorporated is a promising long-term investment as it is one of the leading players in the Chinese e-commerce market, which is expected to grow rapidly in the coming years. PDD has a unique social commerce model that leverages the power of social networks and gamification to attract and retain customers. It also has a low-cost structure that enables it to offer competitive prices and high-quality products. These are the 4 stocks that we believe are the best financial bets for 2024. These stocks have the potential to deliver massive returns to their investors as they are leaders in their respective industries, have strong and sustainable competitive advantages, and are well aligned with the emerging trends and opportunities in the global economy. And that's it for this video. We hope you enjoyed watching it and learned something new. If you did, please give this video a thumbs up and share it with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our future videos. We have more amazing videos coming up, so stay tuned. Thank you for watching and see you next time.